Welcome back, everybody, and today we're gonna learn another type of a trend reversal pattern, which is called an ascending triangle or a descending triangle. All right, so let's look at them. So when you are buying, this is what we call an ascending triangle. As you can see, that it's ascending because these highs, okay, these highs are higher than the previous ones. Okay, like this is a higher highs, higher highs, higher highs, higher highs. So how do you trade this one? You want this horizontal line to be bridged until it so that you can just catch the bullish move, right? So let's just look at the bearish one. Okay, so this is the bearish or this is the ascending triangle. Okay, so this one works when the market has been bearish, going down all the way, and then it does something like this, and then you draw the first resistance line, then the second resistance line. So your first resistance line is supposed to be straight, okay, supposed to be straight like this one, like so, okay, which is pretty much so it's straight, right? It's supposed to be like straight like so, yeah. And then the bottom part's supposed to be ascending, right? When the market has been moving like so, when the market has been moving downwards, when it gets tired, sometimes it's comes in and creates some ascending triangle to go all the way up, okay, to breach this level and go all the way up, right? So pretty much that's what the market does. Okay, that's what the market does, right? So as you can see, the market has been bullish, right? So how do you anticipate that this thing will happen? Okay, fine, the market will do something like this, start to do something like this. This is what we call a descending triangle. A descending triangle. So this is the reason why so many people fail or lose in the market, because they quickly trade without analyzing or without knowing a lot of things. They think this is a head and shoulders pattern, right? But because they don't have patience, they simply sell there. They put their stop loss right about maybe there, on top there, risking more again, okay, not knowing that this phase wouldn't have been breached yet. That's the reason why you need to wait for a strong breach move, okay? Or just to be safe, guys, when you are trading head and shoulders pattern, just check them up in the previous videos. You just have to wait for the pullback, good breach and a good pullback, okay? And then you take your trades right about there, and then you can just go all the way down, okay? But in this scenario, we are saying we want to trade this type of setup, right? So we won't confuse it with the head and shoulders pattern. Why? Because it hasn't been breached yet. But even though I'll be thinking it's a head and shoulders pattern too, but I really have to wait for the breach, the retest, and then I can just sell, just to be safe, right? Or I can just wait for the strong bearish candle to breach, so this will nullify this whole thing, okay? So if the market comes again and does something like this right about there, I would have known right now I'll be knowing that this is an ascending triangle. So what do? I simply draw a trend line, okay, a trend line like so, stretch it to the future, stretch my horizontal, stretch my my resistance line like so to the future, anticipating that the market will keep on doing this, and this, just like this, simple as that. So this is how you anticipate these type of moves. The opposite is true. When the market is going down, you anticipate this so that it breaks. When it's going bullish, you anticipate these type of moves, which I'm doing like so. So as you can see, it's making some higher lows, higher lows, higher lows until it breach right about there, okay? So why is it making these higher lows, higher lows, higher lows, higher lows? It shows that the market is losing momentum to still doing what it was been doing, like creating some higher highs, right? It just made this tip and then lower tip of this lower tip, and lower tip of this lower tip. Okay, so yeah, so now the market, usually we've got two entry points. You can either wait for the strong bearish move to break like this, okay, but since we are closer to the pivotal point, you can always, it's safer to put outside this triangle, okay. And then for other guys who like to be, tactical in forex, the first TP, the other way to analyze or to anticipate your first take profit is to measure how long this thing is, like so. As you can see, I've measured it, and then that's the size of your first TP. Okay, let me measure this one. You measure it like so. Okay, that's the size, or that's the how long your first TP would be, like so. Okay, so your first TP pretty much it will be somewhere there. Okay, so your first bridge, your stop loss right about there outside, and then you would be able to hold until the market breaches and fill up the escape. The second thing to anticipate as well, or to consider, is these points. All right, these points are good also to take out your money. So that's where your take profits are. First take profit, okay, because what about there the market will react. Second take profit, and third take profit. What about these levels? The market always reacts, whether you like it or not. You can check on the market on your own. The market always reacts right about there. Okay, now the second entry point is that you wait until the market does something like this. Usually the market does something like this. Okay, usually the market does something like this. It breaches this level, okay, breaches this level, comes back up to this resistance level, then you can sell again. Your stop loss is still above this entry point. You can even still use this last peak, it's fine, like so, or you can even just put outside, just leave a much space right about there, and then your take profits, sell right about there. First TP will be there, and when the market does this and pulls back up, as you can see now, price action start to make sense now, because there's this resistance level where the market actually left a trace of reacting, and now we know that it's gonna react. Why? Because the market also reacted right about there, so why won't it not react there? Okay, the floor is now a roof on this current price, so I know that the market will bounce there and go down to look for this zone right about there. So this is just like how price action repeats itself, guys. This is how the market has been moving so far. That's how the market is going to like copy itself going all the way down. The market always does the same thing. It always repeats itself 24/7, 6 to 6. It always does the same thing. It just copies itself up, So for those who know the algorithm of the market, is that I'm telling you right about now, the market repeats itself. So you just need to analyze how the market moves. Okay, so as you can see, we've been analyzing how this move has been moving. We now know by anticipating how the market will move, and for sure the market will be doing something like this. Okay, like impulsively, as you can see, this impulsive move, by the way, it will be like something like this. So it's like, this is a big move, this is a retracement, this is a big move, this is a retracement, this is a big move, a small retracement. So again, we can sell again there and put our stop loss. Okay, right, I just made a mistake, and so we can sell what about there, put a stop loss right about there. You can sell and try to catch this big move again and again. Sometimes the market breaches this level and does this and won't touch this point for us to enter again, it's fine. And then the market just does something like this, okay, and gets into this zone. All right, so if the market gets into this zone, this means that the market is about to go up all the way. As I've been saying, the market does this, okay. Now, as you can see, this is the previous high, this is the previous high. This breach would have actually nullified these whole points, so I would have been gone out by then, okay. My first entry point up until out, because this one tells me that the market is about to change, okay. So this is what I would have been this is what I would have made, okay. The market will move down like so and maybe finds another setup, which is a trend reversal, which is a ascending triangle. By so I'm saying that the market is ascending wise because of these lower highs. They're high, and this one they're failing to break this you know, zone right about there, which would be like so, like a roof, okay, like so, and then the market breaches this level, nullifying all this. So right now I'll be knowing that the market is about to go up all the way. So then I would again put my stop loss right about there, enter for buys. Simple as that, guys. This is what price action is all about. Simply knowing your patterns, simply knowing your reversal patterns, which phase are you in the market. Are you in a bullish market? Are you in a bearish market? Are you in a consolidation market? So thank you everybody for watching this video. I hope a lot of people learned a lot about this on this video, and catch me on other videos when I'll be explaining more about price action, all right, so that when we are moving into candlesticks analysis, you all won't be confused. Thank you very much. I'm out.